Good morning, everyone, and welcome to Morning Market Movers, where we'll do a live analysis for day trading, where we look at hot spots in the market for today. It is Thursday, October 28th, and I am Todd Rich with Nadex. With me from Keep Trading Simple is Brian Caprice. Before Brian and I jump into it, I do need to quickly share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. We did have quite a bit of economic news from last night, and we'll touch on a bit of this. German unemployment change is down; their unemployment rate stayed the same. We Some of the more interesting things, inflation in Germany. Oh my
Transitory.
gosh,
Transitory. It's transitory.
inflation's going higher, and then to couple with and we are going to also talk about. I want to point out that our GDP, while yes, it's growing, it is not growing at the rate that was before. So our growth is shrinking, and inflation is going up, and we did talk about the central banks are going to only start making some moves. We teed it up yesterday. Canada had their monetary policy decision, and the Canadian dollar went to the moon. That's actually the Canadian dollar going up because it's in the second position. It absolutely took off. Why? They stopped. They are stopping their quantitative easing, and raising interest rates is the very next step. We are going to see central banks doing that, and it's going to disrupt the foreign exchange markets. We said this yesterday. We're going to have to pay attention to whenever the central banks are talking, whenever they're making their monetary decisions. Those policies will move these markets, and we're probably going to see that for the next year. Now, that being said, meanwhile, corporate earnings are still blowing them out. And Ford reinstated their dividend, and they're growing. Stocks up, almost 8-9% this morning. We've got Amazon and Apple announcing earnings after the close today. So there's a lot of things happening on the equity front as well. So we're definitely going to have to talk a bit about FX. We'll certainly also talk a little bit about equities. Brian, I'm going to flip it over to you because I know you're going to have a whole dissertation on stagflation, huh?
Yeah, that we talked about yesterday. But yeah, one of the things I heard in the Ford earnings discussion was the fact that their profit was so good, and that got pushed. I guess the reason they said that it is because the reducing cost of chip prices, which is funny because all we hear is supply. That's like the supply
Right, but they
shortage
don't
is
have
what everybody
any.
says.
Right.
Yeah, but they're like, we don't, because of the reduction in costs to acquire chips, that's why we were so profitable this quarter. It's like, wait, I thought there was supply chain issues, right? So anyway, starting with yesterday, there was a lot of news after we talked. We knew we had crude oil inventories. Again, we're out of oil, guys. Go buy it. No, I'm just kidding. No, we had another increase in supply of 4.3 million barrels. So again, we're technically out of oil, right? That's what they're telling us, supply shortages with oil. But again, the forecast was supposed to come in at 2. It came in at 4.3. So that was a big mover. If you guys were trading that news release, it did it a little fake out. If you had done the 35-1 and looked for that level of stabilization, you got into that one for the short. It ended up launching itself down and coming right back up again. But that one did a little bit of a head fake right at the very, very end. It started to move a little bit early. Again, looks like somebody had the data ahead of time. But again, the stabilization showed us there was a short that I think it dropped like 8 or 9 strike prices. So had you been looking at that one? But anyway, we knew we had the as you mentioned, we had the BOC monetary policy report. We mentioned that currencies is about to get crazy. If you look at the 24-hour pip change, the only thing that really has had any movement in the last 24 hours has been the CAD. It's been retracing its big drop yesterday, but we're 53 points lower than where we were yesterday right now. but that was after we had a huge move in price. You saw it on your chart. So I think it's important to bring that one up. And again, this was a huge move, guys. In 2 candles, it's one candle, 130 pips to the downside.
Yikes.
That's a lot of strike price moves, even on the dailies. And we knew it. We were talking about it. We called it. We said that the 124, we were looking for price to go up there before news. We had done this drawn yesterday. And again, we expected there to be good CAD news. Did I expect them to just say, okay, tapering's done? That's it. No more tapering. We're done. There's no more. It's like, wow, that's it. No more quantitative easing. Gone. Just like that. And again, Jamie Dimon said it. Multiple people said it. When these central banks, they're going to be forced to move, and they're going to move fast. Okay, there was no taper. It was just, okay, we're done. The spigot's off. Okay, and the response was just absolutely huge. Now, on the other side of it, remember, as a price action trader, I'm looking for areas of buyers and sellers. We have been talking about 123.07 for a while, and more specifically, because again, we had that level of basing deep in that zone, that 129.99. Well, guess what? You can see exactly what it came down to in this big rush, and people see this and like, how'd you know it was going to turn there? The answer is I didn't know it was turned there, but I knew that I had a high probability chance of it doing it that way. And again, all I did was able to lower my risk by using that level based off of what I've seen in the past. I love when people throw a price action out there and they're like, well, what does it mean? They're like, well, you're looking at no, it's about the candle formation, guys. That's how we were able to pick this bottom out. And if you've been watching, you knew exactly where to go. But again, this is where Nadex is great. Pre-news, how do you take advantage of pre-news? Again, on a technical basis, I'll move the black so you can see it. We knew that price was moving into an area where sellers had been. Taking something a little bit farther out of the money down here, what does it do? It reduces your risk, right? If it goes high, you lose a little bit of money because you bought it out of the money, right? If you bought it at the money, yeah, it worked out for you, but you had a huge level of risk here.
Right.
Okay? We knew that this was a high impact news. Anything with getting rid of quantitative easing, tapering quantitative easing, or raising interest rates, those are all huge market movers in the currency market. Here's your response. And again, right now we're 50 points lower, but you can see it's retraced back up 50. So even if you had taken the after move, again, parabolic move down, all it did was it came back over and it retraced back up again. And, again, if you want to get crazy with fibs, we can throw fibs on right here. What is it rolling off of? What is it turning off of? The 61.8. Right, yep. The 61.8. Now it's rallying back up again. It kind of did its turn. This turn right here occurred at the European Open at 3 a.m. this morning. So again, European market was like, hold on, let's go. Right, so they started to push it back down again. The question is this going to come all the way back down to the 23.6? There were some buyers over there stabilizing it, and that's where a little bounce occurred. That would be the first target. But I would say at this point, again, look for it to probably come back down and test that 122.99 or the 123 flat. It's still a valid area. It halted this big, gigantic move down and was the new bottom. So again, it's another hit off of that same level. Second hit, but again, look what it stopped. When we talk about catching, they always tell you, don't try to catch a falling knife. Well, I mean, if you know where the bottom probably is with a high degree of certainty, then yeah, go ahead and take it. Just understand there's risk in all trading, right? But this was an easy setup. And remember,
with Nadex products, it's still your risk is limited. So it's just a matter of right. When do you want to step in and looking for those opportunities.
And the way to trade it, remember, we're looking for the opposing zone as a profit target. Everybody's like, well, how do I know when to get out? Well, I mean, if this is where you're shorting, look for an opposing zone. You could have put yourself at a profit target right here. And again, that's numerous strike prices down, or put yourself at the start of the opposing zone. If you're waiting for an after trade move, after news release move, because if it did nothing, then whatever, if you're risk averse, then trade the retracement back again. Then you're waiting for it to come down here. And again, you guys have seen this pattern once or twice. There's your push up, there's your push back down again, and there is your push higher, right? That whole kind of confirmation pattern through. Okay, so that's dollar CAD. Again, this is how important these monetary policy reports are. Todd has linked the economic calendar. You guys can see these in advance, like days, weeks, I think years at this point.
And we'll be pointing these out as frequently as we can, so that you just know, hey, these are those times when you can be looking for potential opportunity instead of sitting there all day waiting for something to happen. You know when to focus. So,
yep, yeah. So I would say that a lot of opportunity. There's a lot more of them this week. Again, anytime there's a monetary policy report, particularly in the next 2 months. These are always going to be big trading opportunities. Another thing, again, with oil, we saw that the oil inventory was very, very high. Across the energies, again, the initial response off of it was this kind of pop. But that much supply. It's coming. We touched the 80-50 mark. We've rallied up a little bit. You can see there's a little bit of basing in there. I would say right now where we are, the European session is, it opened here. We're kind of closing right where it did. So it really isn't giving us too much, but I look for buyers if price is able to get down to the 80-65, and then those sellers, we've pushed up once, but there's another group of sellers sitting right around the 83 mark. So, overall, the data that we got this morning, we saw the GDP down. That's not going to be great because it's showing that we're slowing. We're paying more for things. I mean, I think it's pretty much accepted. And unemployment claims are even lower. They were supposed to be 290, came in at 281. So to say that, it's the labor market, no, it's not the labor market because the unemployment claims numbers are lower than what they were pre-pandemic. The inflation is once again higher than expected. And now we're seeing GDP also lower than expected. And I mentioned the word stagflation yesterday. If you don't know what it is, go look it up. Investopedia has some great examples, great definitions of it. But basically, we get to a point where we're not growing. Inflation is extremely high, and it causes a problem because the way that you have to control inflation, the way that you curb inflation crushes basically it crushes company profits. Lending gets more expensive. It's kind of counterproductive. But if your GDP is also bad and you're not growing, it's kind of where it gets to be a bit of an issue. So earnings are great. Companies are making money hand over fist, but the country's not growing and inflation is getting out of control. And it's in an environment where they have to raise, or we go into that hyperinflation, which people have mentioned. So
right. So we do. It's coming. We're watching it coming.
Yep.
And Canada was, just a step in that direction.
And we're seeing comments out of the ECB right now. Inflation expected to rise further, right? And then it's going to ease in 2022. But remember, it was supposed to go in July.
Right.
So I mean, I feel like this is their fair balance. Yeah, we're going to have inflation for the next year, but it'll come back down eventually, right? I don't know. She's I'm confident. Oh, I got to see this one. Confident temporary of inflation is the correct view. Yeah.
Wait.
I guess so.
I want to see it. What, confident temporarily.
Yeah, I'm not sure what that means.
Is there confidence temporary?
Yeah, I'm thinking that's kind of yeah, conditions for a raise or for a rate raise not likely to be met in time frame expected by markets. I don't know.
So,
like I said, I'm not exactly sure what they're looking at anymore because everybody sees it. And again, a price index rise of 5.7%. And that's quarter over quarter. So inflation is here. It was supposed to be temporary, and now it's not.
By the way,
we're not even. Huh?
Did you on those comments? I mean, she just made those comments. Take a look at what the euro just did. It just took off.
Mm-hmm. Yeah, and it's kind of.
I mean, that literally just happened, and yeah, it just because that's going to affect how the European Central Bank starts doing things, right?
Mm-hmm. Yeah.
So, I mean, we didn't know that she was going to do that. We didn't know she was going to say that while we were sitting here talking on the show. But that just
we knew she had a press conference.
She had a press conference, and you see how quickly the euro responded. I mean, on the short duration binary options, while she's speaking, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. It actually went up 12 or 13. I mean that's
yeah. Their quantitative easing is gonna end in March.
There it is.
They just said it's gonna end March 2022.
So
okay. Well, she said I have every reason to think that it's gonna be that way, but that doesn't mean it's gonna officially end. But yeah, it'll probably end. Yeah. So it's gonna rise further. So yeah. So
I know we've got nat gas inventories today, and then I also want to just kind of quickly take a peek, at least at the Nasdaq, with equities all looking to open in the green. And I know we want to be cognizant because everyone's going to want to get ready for the open in a half hour. Let me flip this back over to you.
Yep. I mean, here's NG right now. It's dropping. I mean, we're back under the $6 mark. I think it's important. I think buyers, we need to be cautious about this $5.86. Again, we're seeing more oil. Natural gas is down 3.4% already today, is what the listing is showing. So, I would say, again, the 35 and 1 is going to be important. I would say the big driver is going to be right now is, if you're looking at, and again, I'll go back here just so we can kind of see what the forecast is supposed to be. Natural gas, again, this is a currency website, so it's listed here. Natural gas is supposed to be, less supply than last time. Well, I mean, last time the forecast was 87, it came in at 92. It's supposed to be at 86. We'll see what the supply looks like. Again, it's not necessarily a negative, but I don't know. I would say with some of the pressure coming off from oil, it'd be interesting to see where this drives to. I'm not sure we can get. I mean, I guess we probably can. If we can get all the way down, I would actually say probably a long area. But if we break through and we break through this, the $5.82 area, there could be a nice little run all the way back down to the $5.60 mark. So I know that's the opposite. A lot of people are like, oh, 650, 650. But we got a decent top in here, and again, seeing sellers kind of stack in over here on the top with this descending reel. Again, a base, a drop, a base again, a little test, and then it got hammered down in a base and a drop again. These are pretty, nice little candles drawn in the early morning hours. And the European market is right around here. So there's an initial pop, and then it's really just done nothing, gone lower today. So it's not as quite as manipulated as oil. But again, that $6 mark is like 1,800 in gold. It's a big number that a lot of people are focused on right now. And yeah, I would say, I mean, the way that it's looking, if we can get through the gap area here, again, I think the gap gets filled today. But if we can get to this gap area, I think $5.60 is probably on the radar. And again, like I said, they're sellers forming zones up top. So if it's gonna skyrocket, it's gonna have to go through a lot to get through it. It's going to have to be a real big number on the opposite side, and we don't typically see the real big numbers in this one. They're slight misses, but that's because the forecast was pretty high. So again, 35-1 starting at 10 o'clock today. That will be at 10:30. Start looking for some levels on the 30-minute for basing. Drop it to 15. Look for those levels of basing, and then look for stabilization on the 1 minute. Will be the way to play that today.
All right, let's take a quick peek at the Nasdaq because we did want. I know we've got Apple and Amazon after the close today.
Yeah, I mean, I think the expectation would be that they're both going to be good. I mean, I would be very, very surprised if Amazon was bad. I'm not exactly sure if that's even possible. I don't think Amazon's ever had I'm sure they have, but I feel like, in the environment that we're in, remember, if you can't find stuff at your local store, where are you going?
Right.
Amazon.
Well,
Right?
where are you going?
Get it delivered.
Even for anything, just for the convenience factor, right?
Yeah. I mean, I don't know. I mean, my wife, she does a lot of the shopping, and she was like, she's like, oh, there's all this random stuff on the shelves because they don't have anything else to put out there. I'm like, oh, okay, just go to Amazon. So I don't know. Those earnings are probably going to be good. I would say look for this one to kind of push through. Again, remember, we're going to look at this one on a 15-minute. These candles yesterday, even though it seemed like it was pretty sporadic, great setup. Actually, again, the strategy we've been talking about at the open, guys, on the 15-minute, I think it was 4 for 4 yesterday. All 4 of them out of it. So again, nice little basing area. The Europeans took over, found some buyers right below 1560 or 600. We've now driven all the way back up again, and I think this pullback, particularly on the 15-minute, is kind of setting up for us to kind of drive higher. Now, is the GDP number good? Not really. It's not what you want to see. It is up 2%, so again, that is good. The unemployment rate hopefully will counterbalance that one. But I think at the end of the day, it's all about earnings right now, and everybody's earnings were great. So, but the expectation is going to be that the other earnings are going to be good as well. So, I mean, there's, a small area here. Looks like a bunch of buyers sitting in there. Nice little base here. This may be the launch point at that kind of 930 candle right there to go higher. So I would say 15,700. I think today the big story would be with all the earnings that are great. I think 15,800 could potentially be something that it's looking for. Remember, the ATR is we can get. I mean, it's got this area of profit taking sitting right there, right, and that's right above the 15,700. But I mean, less people are unemployed. Again, we're seeing profits across the board with all this stuff is good, and Amazon's a big number. If you're talking about supply shortages, if Amazon blows it out saying we don't have supply shortages, it's kind of like you got a question: do we
sell? Right?
Yeah, do we really have supply shortages? Right? So,
all right. Well, with that, any questions for Nadex? Please email us customerservice@nadex.com. Brian is also accessible. support@keeptradingsimple.com. What are we talking about today? Well, as I'll go back in reverse order. Earnings have been great. Equity indices all punching higher. We've got Apple and Amazon after the close today. And as we saw, even Ford Motor, I mean, they reinstated their dividend. They're doing well enough that they could start giving cash back to the shareholders. So corporate earnings looking great. Where we are seeing a lot of the action, one yesterday we saw the Bank of Canada. They end quantitative easing. The Canadian dollar takes off. While we were on this call and the ECB, the European Central Bank was speaking. Uh, Indications that there's inflation. This something's going to happen. Not total confidence, apparently, that uh, that inflation's going to continue. So uh, the euro just took off.
Yeah, I
It's
think what she's trying to say is transitory, but not using the T word. I think that's a
right
dirty word now. Confident of
because I think
temporary.
everyone's fatigued from it.
Can't even say it.
So
Yeah. Yep. Absolutely.
every time and it's going to be we're getting to that season. European any central bank speaking, we're going to have to pay attention to the currencies. We are going to see some short-term price action and volatility in the FX market as everyone digests. I mean, that is the largest market in the world. So, from a notional value, realize how impactful that is. Brian and I will be back tomorrow, our pre-Halloween special. I want to give everyone a chance to get ready for the open today. Thanks for joining us, and good luck in the markets.